Imagine you are holding a dollar. It feels real. Paper, ink, numbers. But here's the strange part. That dollar used to represent something physical, something heavy, something locked in vaults. Gold. For most of modern history, money was tied to gold. But one day, in 1971, something changed, quietly. No public vote, no giant headlines, no dramatic warning. But in that moment, money changed forever, and most people never noticed. Today, every dollar, euro, yen, and pound works differently. Not backed by gold, not backed by silver, just backed by trust. This was the day money became something entirely new. Let's rewind the story. Imagine money like a claim ticket. You walk into a vault, you hand over a piece of paper, the bank gives you gold. That's how money once worked. Your dollar was basically a receipt, a promise that gold existed somewhere. Think of it like a coat check ticket. You give the ticket, you get your coat. Simple. But there was a problem. Gold is heavy, hard to move, and limited. Economies were growing fast. More businesses, more trade, more people. But the amount of gold stayed mostly the same. Now imagine a pizza. 8 slices. Suddenly 16 people want a slice. The pizza did not grow. So governments had a dilemma. Either slow the economy or create more money. Guess which option they preferred? After World War II, the world created a new system. It was called the Bretton Woods system. Under this system, the US dollar was linked to gold. Other countries linked their currencies to the dollar. Basically, the dollar became the center of the global money system, and the US promised something important. Any country could exchange dollars for gold at a fixed rate, $35 for 1 ounce. For a while, it worked. Trade exploded. The global economy expanded, but a hidden problem was growing. The United States began printing more dollars, much more wars, government programs, economic growth. More dollars entered the world, but the gold supply did not grow as fast. Imagine printing thousands of coat check tickets, but only having a few coats. Eventually, people started asking questions. Countries began to worry. They started exchanging dollars for gold. The gold vaults began shrinking. Pressure was building. The system was cracking. Something had to give. Then came August 15, 1971. US President Richard Nixon appeared on television. He made a decision, a temporary change. He said the United States would stop exchanging dollars for gold, just temporarily. But that temporary decision never reversed. In that moment, the link between money and gold disappeared completely. The dollar was now backed by something new. Not gold, not silver, but trust. Trust in the government, trust in the economy, trust in the system. This new type of money is called fiat money. Fiat means money that exists because governments say it does. Think of it like game tokens. They work because everyone agrees they work. Now here's the twist. This change gave governments enormous power. They could create money more easily, much more easily, and over time, almost every country adopted the same system. Today, nearly all money in the world is fiat money. Paper, digits, trust. No gold vault required. So what happened in 1971? Money stopped being a claim on gold and became something else. A tool, a system, a shared belief. Some people say this made the economy more flexible. Others say it opened the door to inflation and financial crises. But one thing is certain. The modern financial world began that day. The money in your wallet today is very different from the money your grandparents used. And understanding that difference changes how you see the economy, because once you understand how money works, you start asking better questions about inflation, debt, central banks, and the future of money. If this video helped you understand money a little better, subscribe to Capital Ledger, because the world runs on money, but very few people understand how it really works. And that's exactly what we explore here.